So we have a balance sheet, we have an income statement, or we also call it profit and loss statement for a manufacturing company which is manufacturing garments for sportswear. So when we get a balance sheet, what is the few things that we do? First, we calculate the activity ratio, which lets us know how efficiently company is managing its inventory and utilizing its assets to run the business. Then we calculate solvency, liquidity ratios. Okay, let's start with activity ratio. In activity ratio, we start with inventory days, receivable days, creditors days, inventory turnover, receivables turnover. This is we calculate. We also calculate working capital gap, cash conversion, operating cycle. We do. Okay, so let's jump into the calculation. Inventory days. Let's start with inventory days. How we calculate inventory. Okay, as you can see in this is the balance sheet we have, and we want to calculate inventory days. So the formula is inventory by cost of goods sold. So this is from income statement we have taken only. There used to be use list of expense also, gross profit, net profit, that we have not taken, just to calculate some relevant information that we will do later on. But for this video we have these two items only from the income statement we have taken. Okay, so this is cost of material consumed is only cost of goods sold. Inventory, receivables and creditors, how we calculate. Okay, first see creditors days, later on first inventory. This here you do, here we calculate inventory. Trade receivables is only called receivables, so this value we will use in that formula. Okay, and this is COGS. So this is the COGS. Okay, so inventory by cost of goods sold into 365. When we do for this given balance sheet, it is coming out to be this number of days, 112 days. It's too much. 112 days it is taking to convert from raw material to finished goods. It is taking 112 days. It's a lot time. Okay, it should be 1/4. Okay, half, less than that, whatever. So company is not managing its inventory efficiently. Receivable days, it is coming out to be receivable by sales into 365. It is coming out to 56.7. So as you can see, the sum of these two is only coming out to be 169. So that means company is not efficiently managing its inventory, and this is very bad management. Okay, 90 days is too much, or whatever. Creditors, it is the creditors divided by cost of goods sold into 365. The value is coming out to be 90. Nobody gives you 90 days. The suppliers, creditors means the suppliers who is supplying raw material to you, they are giving 90 days. Means you are buying the raw materials and you are paying after 90 days. That doesn't happen that way. Okay, but company is showing 90 days, so means company is not managing its inventory efficiently, so it is needing lot of fund. Okay, see, 7 crore they are taking in loan. Okay, 974 inventory days, it is coming out to be 974 crore, 9 crore 74 lakhs. It is stuck in inventory, means so much time we are taking. How we calculated this value, let's make you very clear. So first, working capital gap, how we calculate? Inventory days plus receivable days minus creditor days. So 112 plus 56 minus 90, it is giving this value. Okay, so this so many number of days they have working capital gap. So this is the amount, this is not the amount, this is coming out the number of days. So we want to find out how much amount they need for the working capital. CC, cash credit. We have calculated sales per day. How we calculated? This is the revenue, this is the sales actually. So sales divided by 365, we calculate sales per day. So this is coming out to the value. So we'll multiply this to 78.894 into 864, this value. So it will come out to be certain value. So that will be the fund required for calculation of inventory, I mean working capital gap. That will be the fund required for working capital gap. And see, and we also calculate cash conversion cycle. That is working capital gap is only conversion cycle. It is coming out to be 680.653. So 6 crore, almost 7 crore fund they need to run their business in given scenario. Whatever the number of inventory days and receivable days they are taking, they actually need 8 crore, almost 7 crore of fund. Okay, so this was the activity ratio. Similarly, we can calculate inventory turnover, receivables turnover. Just it will be reverse of this formula. COGS by inventory. If we reverse this formula, we'll get inventory receivables and sales by receivable days and sales by average receivables. So here we have done it more finely.